Let's get down to the New York Stock Exchange right now. Go see our friend Jim Cramer. Jim, it's great to see you. I was, of course, following you on Twitter, and during our conversation in the 7 o'clock hour with Robert Frank about taxes and that ProPublica story, you sent out a very, very provocative tweet. Could you elaborate for the audience who may not have seen it, what you just said about billionaires and wealth taxes?
We all know from ProPublica it was easy enough to figure out who's a billionaire, right? So why not put a surtax on billionaires? Now, I did not expect this to be all that controversial. I mean, remember, President Lincoln was really the first president who suggested that we do a graduated tax. I think that Lincoln would be aghast that these people are paying nothing. And so what you have to do, I mean, we've had surtaxes at various times. Have we targeted individuals? No, but we all know that they're billionaires. Do we really have to sit here and just say, you know what, we're helpless? I mean, I think step up in basis, which you've talked about. The fact that they even have that loophole, which is so great for rich people, Andrew. I'm so glad you bring it up, and I know eyes glaze over on it, but it's an amazing tax break. It's one of the best in the world. But we've got to just find a way to say, you know what? Let's just figure, okay, you're a billionaire. We're going to charge you a 2% charge, and we're going to come up with a formula, which we can do, that involves all the stock lending that you do, where we can, they're not billions of billionaires. Let's come up with something for this small group.
So, but is this then an Elizabeth Warren-style wealth tax, and you're planning to tax unrealized gains, or you have a different sort of formula that's capturing realized gains in a different way?
How do we find out that they were billionaires? How?
You looked at you either opened up Forbes magazine or you looked at how many shares they owned in their company, and you did some multiplication.
So you're the IRS. You do the multiplication, and I don't want to hear that those people are disenfranchised by a surtax. They're not. I mean, we have to start coming to the realization. I know everyone thinks that they can become a billionaire, particularly the people on Wall Street bets, because they're as savvy as Charlie Munger, as far as I can tell, because they say things like that. But one thing I absolutely, Andrew, I'm tired of is to read that. And Jesse did unbelievable reporting, and we all know it was just great reporting. And just to say, you know what? We're helpless. There's nothing we can do. You know what? It's just the way it is in our country. It's not the way it is in our country. And by the way, this is how you start a revolution against rich people, is you have this happen. I mean, this is what happens. We're a more fragile democracy than people think. I'm sorry.
I'm sorry. Is it to realized gains or unrealized gains? Is it a wealth tax or an income tax?
I don't. They obviously are able to avoid paying income tax.
A lot of them live outside the system.
Not evade, but avoid. And I know avoid is legal, and the government says you can do everything you can to avoid. I think that has to be changed. I think that has to be changed. I think there has to be.
Jim, let me ask you one other question.
Is that what am I Mark? I'm not a Trotskyite here. I mean, I'm not asking for the workers to own the means of production.
But one of the fascinating elements of this is, over the last decade, maybe 20 years even, we've talked about long-term focus by companies, executives at the top, and short-term focus. And taxes play a role in short-term focus. And I raise it only because if, in fact, there is a wealth tax of some sort or the tax that you're describing, and I don't know what we'll call it, you will have these investors selling down those shares, right? And that will become another part of the calculus as an investor. Will that have an impact on other investors?
Well, I think that, again, I am limiting the amount. Now, I don't think someone's going to go and try to be worth $999 million so they avoid the tax that I'm talking about. I'm saying there's an elite group of people, and this society has to start addressing this inequality. And we have to, look, does Elizabeth Warren talk about it in a way that I think is a little bit too severe? Yes. I'm trying to make it so that I don't want kulaks being killed by Stalin in our country. And everyone thinks our democracy is so solid, except for on January 6th, when I think our democracy wasn't that solid. And I think that we ought to start thinking about the institutions being weaker than we realize. We have to read On Tyranny by Tim Snyder at Yale, and you'll see how fragile institutions are. And the people who are doing this, the billionaires, they should be thinking more about how the government, it is incredible that it protects them.
Shepard Smith here. Thanks for watching CNBC on YouTube.